Hello guys and welcome to Hakman Traders. In this video I'm going to be showing to you guys how does the stock market works. Now how it actually works while when you're trading in the stock market there are two persons. I would say that one person is the seller and the other is the buyer. When the when one person sells the other buys, so the stock market works in this condition. But there are certain prices that both the buyer and the seller fixed for their equity, for their shares. So so what basically happens in the stock market, I would explain this to you in the first portion later. So what happens, basically a company issues its shares, issues its properties to the its property to the public. Now what is a share? A share is a piece of paper that provides ownerships to the public. Now when the public buys, there are two types of person, like I mentioned earlier. One is the buyer and the other is seller. So when the one sells, the other buys, but both of them have their fixed prices for that. Both of them fix their prices. Either the buyer fix a price of 20.96 and the seller fix it for 19.45. Both of them have their own require their own demands, due to which most of these there is not just a single buyer for the stocks. There are many buyers and many sellers as well in the stock market. Each of them are selling their stocks in different companies. So with that the companies ri- if with that the company's prices and the company's volume and all of that stuff fluctuates accordingly. When when the investors are interested in a certain stock, they would withdraw their investment from other stocks or other companies and all that, and they would invest that into one company, which will result in the uptrend of that stock. That stock would reach to its all time high if the investors are confident in it, if the investors are willing to invest in it for their for the last part. So for due to that reason, the stock price would go up and the stock would give you much more returns than it previously than any other stock would. And if the sellers are not interested, they would withdraw their stock from that they would withdraw their capital from that stock, and that stock would immediately plummet. So as you can see right here, it immediately plummet because the investors were not confident at this level. So due to which the stock declined and the prices are now fluctuating. So now take a look at this one. The investors were confident at this level, so they invested in the market and the market went up. So keeping in view these two factors, both of them play their important role in the while trading in the stock market. Now some of it can happen that some of the investors can some of the investors invest for long term and some of the investors invest for the shorter term. So for the long term, like I've said in my videos, I invest only for those stocks that I knew that this would go up in value. And for those, what you call that, IPO, initial public offerings, I would do specially for those type of stocks because their prices would go up in value in about certain period of time. And regarding short term trading, now this what I'm doing right here is I'm doing short term trading. I've invested at this portion and now I'm waiting for it to reach to its all time to reach its highest high, so that it can give me profits, instant profits. So we'll have to wait for it to give us profits. Now the stock market provides what the company provides its ownership to the public, and with that ownership, any individual can be a part of that company. It can be a shareholder in that company. It can the the public can take part, buy shares in that company, and they can invest in that company. So they are now shareholders. They have now their right to the companies. They are now owners in that company. What so the stock market works basically like that. It provides ownership to the public, and then the public buy those shares. And maybe what happens is that the public sell those shares within the public. and maybe they buy more shares uh, from the company as well, in order to increase its value, in order to increase its production. Now this was on the public side. Now what happens for the company? Let's say if the company has many investments, many investors are investing, are confident in that company, and they are investing in it. So what will usually happen is that the company would accumulate much more capital, and they would be now confident in investing that capital further on. So when they invest that capital when they invest that capital further on, they will get much more profit, and they will be much more profitable by investing it in long term, by investing it in their further projects, in further making further projects, making further growth. So it would also give the investors the benefit that their stock price would go up in value. Plus, if the company provides dividend, that would also give the shareholder an option to another extra privilege that they can obtain. And there are other in many more that with the increasing price of the company, with the increasing price of the stock, the 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 people, the public, the person that have invested in that, they could have make day trading and short term trading easier. They could have they could profit from it as well. And though that was all on the company's side. So the stock market works basically like that. Now with the increasing prices, there are buyers that are now, like this trend, if the trend is going up, so the public are what the public usually does is that they pay a price higher than higher than the it is trading right now. So they are paying much more higher prices for it than they are demanding. Their demand for it is higher, so they are willing to pay a price higher for it, so they can gain profit from it. Now what usually happens right here is that they are paying a price less for it, because they say to themselves that this stock is not worth more than this, so they pay a price less for it, so they can obtain ownership in that company. So that's all about how the stock market works. Hope you guys are enjoying my videos and want to learn more about the stock market. All I need you is to support my channel by hitting that subscribe button and comment down below, as your feedback is valuable for me. Goodbye.